Hello and a very warm welcome to everybody. I am Shrija Agrawal and with me is a very special guest today. It's an often repeated statement that MSMEs in this country, though they contribute significantly to the GDP growth, perhaps one of the biggest reasons for non-growth or impediment to their growth is credit access to them. Now we have with me somebody who has actually been constituted by the Government of India to lead a unit to solve this major problem, and the biggest problem being the credit access to micro and small enterprises. With me is Sandeep Varma, who is the CEO of CGTMSE, which essentially stands for the Credit Guarantee Trust for Micro and Small Enterprises. Mr. Varma, thank you for hosting us. It's a sheer pleasure and privilege to have you. And thank you for hosting us at the CGTMSE office, which is the headquarters in Bombay.
Pleasure.
Thank you, sir. So my first question, and taking it from the intro remarks that I said, that it's an often repeated statement that MSMEs and MSCs contribute so much to the Indian economy, but perhaps the biggest reason, which is a stumbling block in their growth, is the access to credit. What do you think are one or two key reasons where the access to credit is such a big problem to them?
No, thank you for the question. What you have said is absolutely correct. Access to credit happens to be one of the biggest problem, if not the single largest problem, because the market access, the technology, the skill upgradation, all these also happen to be very prominent problems being faced by the MSEs. But yes, access to credit is bad, and a consoling factor is, if we can call that this problem is there the universe, entire globe, all the countries almost face this problem, because access to credit is to this particular segment is a problem. Now the reasons could be many, but the biggest problem that comes across is the asymmetry of information. The information which is not available in the public domain or in the documents or in the papers that they carry with themselves to submit to the bankers. So if the information is not perfect, then that becomes an impediment, and we all know that beyond a certain point, raising the cost of credit would not result in quality of credit. I mean, there is a concept called credit rationing. So if you start increasing the cost of the lending, thinking that it will lead only to good people to come to your books, sometimes it becomes counterproductive also. And the good borrowers, they tend to leave because they start feeling that the cost of borrowing is too high and I can do well to move out to some other lender. And what you do is that you end up having all the bad borrowers in your book. So the limitation of raising the cost of credit is well established. So that happens to be the biggest problem. Then what do you do? Then the public footprints are not available. Their background is not there, the data does not reveal entire thing. Jokingly it is said that all the MSEs, they have 3 balance sheets, one for the IT department, one for the banker, and one for filing their for statutory people. And jokingly people also say that one also they have for their in-laws just to make them happy. So this is the problem, and once you deal with these kind of problems, then the bankers naturally will be wary of that. So in nutshell, if you say that lack of information is the biggest problem, because that does not come across to the banker, allowing them to have a very informed opinion about the MSEs.
Thanks for that, sir. So one is the lack of information that you said, but I think in the traditional banking system, the bankers also need comfort in the form of collateral, in the form of some guarantee or some collateral which you can actually get from the borrower. Do you think some of these things could also be a potential challenge?
This is, and this problem is emanating from the earlier problem that we talked about, because if the proper information is not there, information asymmetry is there, I do not know entirely about you, I am not in total know of your background and your capacity to pay, then what do I do? Then I try to take something out of the project to make me secure. See, when we started our banking, it was often said, and it is true even today, it was said that only 2 things you need to see about a borrower: his intention to repay and his ability to repay.
Absolutely.
So now the collateral, as you rightly said, collateral acts as a tool to meet both these aims, because ability to repay, of course it is there, because if the project is not able to repay, then you have something in your hand So you can always liquidate it and clear your loan. So ability to repay is taken care of that, and the intention to repay, that also is covered by that, because you always feel that okay, if this fellow has given this land or this building to me or a flat to me, then he'll be behaving well, because he knows that if he defaults, then he will be losing that. So intention and ability, both were being taken care of by the collateral security. So while this is a good tool to cover the risk of the bankers, the credit risk, it has an inherent problem that the segment that we are talking about, the availability of collateral itself is a huge problem. So there lies the challenge. You say that the lending could be done based on collateral, but these guys may not be having sufficient collateral itself.
Yes.
So that becomes a big impediment. RBI has come out with a guideline. They say that loans up to 10 lakh, the collateral need not be taken. So up to 10 lakh is still some some relief is there for the small borrowers and all. But more than that, the bankers are free, and it is true on their part also, because ultimately they are also dealing with the public money, either exchequer's money or the public money. So they also have to cover their back. How do they do that? So one idea is to take collateral, so that in the event of a rainy day, they can liquidate the collateral and get the money back. But this solution is less with the problem that most of the MSEs that we are talking about, and let's also talk about the nano and the informal,
the nano entrepreneurs, the informal economy, yes, absolutely,
because
is
once
huge.
We talk about the micro, with the new definition, even within micro also there would be a segment which is very, very small, which is the informal micro enterprise or the nano enterprise that they are commonly called as. So they may not even be having collateral to offer. Where do they go then?
Absolutely.
So that is another problem. One problem leading to another problem.
So it's a good thing that at least we have identified the problem. At CGTMSE, what really was the intent in terms of setting this unit to specifically solve for this problem? It's a good thing that we've identified that the collateral unavailability for micro and small enterprises is one of the biggest reasons for them to not to actually go and take money from the banks. So as CGTMSE, how do you think it's a win-win situation for both the borrower and the banker?
In fact, the creation of CGTMSE or any credit guarantee institution for that matter is specifically meant to solve this problem only, the availability of collateral. Because as we discussed, that non-availability of collateral becomes a huge reasons for rejection of loans for these smaller ones. Then the government comes forward and government sets up a unit, as they have done in the form of CGTMSE. And there they say that, okay, you give loan to these guys. If the loan goes bad for whatever reasons, then this institution will come forward and make good for the losses that you are making in terms of repayment of loan.
So could you give an example?
I'll give you an example. Suppose a loan of 25 lakh is given to you and I provide a guarantee. Now the guarantee coverage could vary from 75% to 90%. Different schemes are there, different slabs are there. For the smaller loan, obviously the coverage is more. The higher loan, the coverage is slightly smaller. So if a loan of 25 lakh is given to you on the strength of the guarantee, let us start with the original idea. So the banker would need some security, because they are dealing with a segment which is MSEs, where the primary security does not have that much resellable value.
Absolutely.
Okay, so the lender would always look forward to some additional comfort. Now, in which form we provide this comfort, that is important. So one way is to take a collateral, but that was the second problem, because the collateral itself is not there. So there comes the role of an institution like CGTMSE. So I come forward, I provide guarantee to this loan, and the event of this loan becoming bad, suppose 20 lakh, 5 lakh becomes bad, and I have given a guarantee of 80% on that. So because of the account turning NPA, the 80% of that amount I will be giving back to the banker who has given loan to this borrower. Now, when I say that, the responsibility of the borrower is not taken entirely by me, because they still remain liable to
the
bank to clear their dues, because this also is required so that the moral hazard does not come in, because they should not feel that is a government money, so it can be used freely. But the banker's comfort is increased manifold, right? Because earlier there was nothing to cover. Now it is sovereign guarantee, and just because it is sovereign guarantee, it comes with additional advantages that the capital charge will not be applied, because the risk that is attached to these assets is 0% because it is a sovereign guarantee. Then RBI's IREC norms are not applied to. So it becomes a win-win situation in a sense that lending to this segment, which is normally considered to be very risky, the de-risking
Absolutely.
takes place, and the borrower is happy because not having a collateral is no longer a handicap for them. Without collateral also they can come and they can take loan. So in a way, the idea of such type of institution is to democratize the lending. So regional imbalances can be taken care of by these things.
Gender imbalances.
Gender imbalances could be taken care of by these things, and actually a proper use of this scheme can actually synergize all the schemes that government wants to do. Suppose the government intent is to go for green financing, because that is the very important things that we are facing today. And we also have targets that by 2070 we have to become net zero, and all those stuff is there. Panchamrit, Honorable PM Modi has proposed and prescribed, and we are all going by that. So suppose that has to be done, then there also CGTMSE can play a
huge role.
A huge role where
in mobilizing these entrepreneurs.
Exactly, because I have the demand and supply. Now I can mobilize both things. I can mobilize the demand by reducing the cost of guarantee, because the borrowers are more enthused to go for the guarantee and avail this. And I can increase the supply side by increasing the coverage, because the higher the coverage, more will be the comfort of the
banker.
Lending institution.
Yeah.
So if I want to lay emphasis on any particular segment, then I can use both these things or either of the things.
So CGTMSE as a tool can be used very smartly.
Exactly, it's a credit enhancement,
so
where
for mobilizing different kind of entrepreneurs for different schemes.
Exactly, and this is again, I'll say that it's an experiment, or it's a tool being used world over. It's not that it's a new thing and all. In some of the countries, it is as old as 50 years, 60 years, 70 years. We are. I mean, when I'm talking to you, it's a happy moment because we are celebrating our 25th years of existence.
Okay.
So we have also completed 24 years and entered into 25. But it's a very strong tool. I personally feel it's a very strong tool, and of late it has caught the imagination of the bankers. They have also realized the benefits coming out of it, right? To use this tool to reach out to the segment where perhaps without such an instrument, they would find it very, very difficult to reach.
There would have been more reluctance
Yes.
to get these sort
Yes.
of borrowers under their ambit.
Correct.
But sir, I think it's a very important point that you've outlined, that from a distance, it looks very good to be true, right?
Mm-hmm.
Okay, that there's an institution which is giving a collateral-free sort of guarantee, and then there's also non-reluctance from the banker's side to provide the loan. But perhaps that is the moment where the complacency can set in. The banker could say that, okay, now there's CGTMSE anyways to take care of my guarantee, to take care of the loan. So there could be a moral hazard. The complacency could set in, right?
No, I don't think so, because see, what you are telling, this could have been right maybe a decade back, but now with the DPI, digital public infrastructure, coming in a place, then whatever you do, this is becoming known to the entire ecosystem. So I don't think this moral hazard issue is that much relevant today, from the borrower side as well as from the lender side. From borrower side, I will say that even if I have taken a CGTMSE guarantee and I have that feeling that the government would make good, I will never behave irrationally, for the simple reason that once my account becomes NPA, I becomes a persona non grata in the entire banking segment. So this was true earlier also, but earlier the flow of information was not that fast. Suppose a unit becomes an
Very
NPA
important
with
point.
one bank, the other bank may not be aware about that. The flow of information was not so smooth. But now with DPI coming, the bureau being there, the account aggregator being there, I mean, I'm sure that you also would have been offered a free credit card for 1 year and all, and second year very silently one annual fee would have been charged.
True.
I'm sure all of us keep getting these type of things. And the other part also is equally important, that once the fee is levied 500, we can easily fight for that this could be waived, but we do not default on that, for the simple reason we do not want to get our CIBIL report affected. Because
Our
today for
credit score
500,
affected.
yes,
Yes.
so if for 500 rupees, if it is getting affected, tomorrow suppose I am going to get an education loan for my child, so there would be question that, and then you have to do a deep probe, the bankers will do, okay, then a call has to be taken by them that whether it was a real default or ornamental default, but this problem is there and everybody is aware. So when we are aware about that, I am sure that the entrepreneurs who are coming up, they are also aware. So it's very clear in their mind that today's information driven system is very cruel, in a sense that you do a mistake somewhere and all, and you are blemished, you are stigmatized, तो आप उससे बच नहीं सकते हैं. So that is one part which takes care of the moral hazard for the borrowers.
So technology plays a boon role
Very,
here,
very
huge
important
role
role.
here.
Very, very important role. I mean, it cannot be overemphasized. It's very important role. On the lender's part, why the moral hazard does not come in? Because an institution like CGTMSE or a instrument like credit guarantee, it only helps you in managing your LGD, loss given default. The probability of default is not related with that. So taking a guarantee does not mean that the account necessarily will not fail. It can still fail. What I do help in, I help in reducing the loss given default, right? So in other terms, the gross NPA of the banks would still get impacted if the account becomes bad. The only thing where I would be helping the banks in reducing their NNPA, net NPA. So GNPA also is a very important indicator of a bank's portfolio or their performance, that how much contamination is there in their portfolio. So I don't think that the bankers also would like to lend left, right and center only because a guarantee is there. I mean, I put a counter question to you that today if this doubt comes in that only because guarantee is there, bankers may be inclined to lend. Is it true that suppose I go and put a collateral with the bankers, so bankers will close their eyes and lend anything on the strength of collateral? No, they will not do.
True.
Because ultimately the motto is it should be a guarantee for a loan, not loan for guarantee. I mean, the loan need not be given only because guarantee is there. The issue is that if the loan application or the loan request is being denied only because there is no collateral, so this reason has to be erased, and there I step in. We never say that you lower your guards or
you lower your bar,
you
not at
lower
all.
your due diligence
Diligence,
and all.
you don't say that.
You go on doing exactly the same thing, and after that, wherever you feel that you need additional support, additional comfort, then you come and take guarantee.
So thanks for clarifying that, because I think a lot of myth is there that okay, it's because the normal notion of people is that government money, is it free money, and do people really take government money seriously? I would really like to know from you, in the disbursement that you've had till now, what really has been the percentage in terms of the bad loans and the good loans?
No, it's very good. I mean, it's good that you are asking this question, and I agree. I mean, a lot of myths are there, and I'll go one step ahead and say that for myths also, people are to be aware about something to know about the myths of those things. So I would go one step further and say that many of the people are not even aware about CGTMSE, and that this information asymmetry exists. I admit that, and it exists at both levels. Sometimes the borrowers are not aware about this scheme of the government that it exists, and at some point in time we have also seen even the bankers are not aware. So are making Herculean efforts to remove this asymmetry. We are reaching out to the industries association, we are reaching out to the bankers, telling them the benefits, and believe you me, once they come to know that this scheme is there and it is such a nice initiative on the part of the government of India, the acceptance is increasing
Very high.
very high, and it's growing day by day. It's increasing leaps and bounds. So that thing is there, but I mean, these myths are to be broken. Wherever we talk to the banker, we tell them these myths, that it's not necessarily that a collateral is a better, sometimes you start behaving that just only because the collateral is there, he'll be better behaved because he's always having this Damocles sword hanging over his head. Not so. It was true just 5 years back, but as I said, that with this digital public
Technology
infrastructure
coming
and
in,
all,
yeah.
everything getting integrated, it is no longer a very safe haven for any borrower to go for this government thing and No real enterprise would be willing to do that. For a smaller loan, nobody would like to block their journey forever if they want to remain enterprise or entrepreneur, or if they want to grow with public finance. It would be very, very difficult if this stigma is attached to them. So there is a self inbuilt mechanism is there, and I'm very happy that this mechanism has evolved over a period of time, which is very robust. And I mean, you also would be knowing that such a robust mechanism exists nowhere in the world. I mean, I really feel proud of this stack that has developed in our country. And I'm sure that this is going to change the way the lending is going to take place henceforth.
So, sir, in terms of like NPAs, what would be your percentage of the portfolio?
It is percentage is about, see, about 10% would be there in the portfolio that I have. But it is not significantly higher or lower than what normally it is there in the bank. Because when I say this 10%, I'm taking it as a flow concept, not as a stock concept. Normally what happens, the lower NPA, once you talk in a stock concept, the NPA percentage would appear to be lower because the denominator is increasing by recent things, and numerator, as it is, if it is there, then it would appear low. So if I use the same yardstick, even my NPA would be about 1% or so. So it does compare in the same range, but no alarming thing. And the claim payout would be half of that, because by the time the claim payout is done, the repayments happen, the NPA also, the account gets converted into NPA at different stages of their journey. So the longer they take to get converted into NPA, lesser is the burden on me, because by that time the outstanding would have come down. The more mature, or the more shorter the period is for the account to get converted, it's harder for me because the outstanding would be more. So keeping everything in mind, the claim is about 5%. It would be about 4 to 5%, and PA rate is about 10%. So there is no alarm bell ringing.
Alarm bells ringing situation yet.
No, not at all.
So I also want to understand from you that you said that across countries this has been followed. So is it a playbook where across the globe this has been very successful? And where does India really compare against those countries?
Some of the guarantee institutions are doing really, really well. I mean, we have a association where the Asian countries are part of that, and we are also a member of that group. The Korea, they have coded, that is doing very good. So the Korea example experience has been very good. European Union, there are many institutions, they are doing very good, and there are different varieties also. Somewhere it is public, somewhere it is PP model also is there, somewhere it is mutual credit guarantee. Italy is famous for that. Confidi is there, where the mutual credit guarantee is being practiced, and very, very successfully. And the range also varies, the coverage and the slabs and all, but the model remains the same. The overall model remains the same. And as far as our ranking is concerned, we would be the largest in terms of the number of units held. I mean, I'm again very happy to share that we have almost touched about 96 to 97 lakh guarantees having been issued in last 24 years. So very soon we would be, reaching
100 lakhs.
100 lakhs figure. So in terms of number, it is mind-boggling. And that this we have been able to do only because the use of technology, because we have a team of 40 to 50 people sitting in this very office. There is a small place, there we sit and we cater to the entire country. So this would not have been possible without the support of technology. So I mean, I keep praising the technology stack that has been developed globally, as well as what has been done in my institution. Yes.
In-house. So I also want to understand from you that we were going through the numbers of the disbursement by CGTMSE, and it is actually seen that there has been a huge surge in the past sort of 2 to 3 years, right? Yeah. And that sort of coincidentally coincided with the time when you sort of stepped in. So what are the 2 or 3 key things or initiatives that you think you did to first to bridge the information asymmetry, second to let bankers and borrowers know about the scheme, and third just generally build the institution for the future?
Yeah. First I'll give you the flavor of how things have changed. Like when I took over 1 year, we used to issue guarantee about 40 to 45,000 crore. 45,000 crore we had hit in 1 year, and that was the maximum that we had done. That was just prior to COVID. In COVID year, because of COVID, obviously, there was a dip, and from about 44 to 45,000 K, we came down to 36,000 crore worth of guarantee that was issued. But then we took initiatives. I'll talk about that. First, I'm giving you the ballpark figures, and then we made some changes. And year next to that, we did about 56,000 crore, and after that, we doubled it almost. We did in 1 year, 22-23, we did 1,04,000 crore
Wow.
worth of guarantee was issued. Last year was,
A blockbuster.
blockbuster in a sense that we did 2 lakh crore in 1 year. So you can just thank you very much. I mean, you can just compare in one entire year we are doing about 40,000 crore, even at the best level. From there to 2 lakh crore, and this year I am told by the team that we have already reached about 99,000 crore. So in a day or two, while we are sitting and talking, we might have crossed 1 lakh crore, and this would be the fastest, because last year we did 1 lakh crore in 7 months. So this year, if we do 1 lakh crore in a day or two, so it would be even earlier than the 6-month period. So this year we would be doing about 2,50,000 crore, and also you can assume, you can kind of assess the growth that we have done. The other way of seeing the growth is that when I came here, the per day we used to issue the guarantees about 100 crore and odd, and today a rough estimate is that every day we issue guarantees of about 600 to 800 crores, varying between that.
Wow,
so that is the
that's
growth that we are
incredible.
talking
That's a
about.
600% growth.
Yeah, that is the. Now, if we come to know that what we have done, I will say that it could be, it could be segregated in two ways. One is that what changes were brought about in the scheme per se, and the second, what we did, the non-schematic changes, which are, not related to the scheme, but in terms of our behavior, how you function and all. So in the scheme format, a lot of changes were made. The scheme was made more attractive, more lucrative, because we realized that we are being very conservative, and without being there being any reason to be so. Because when we look back, we perhaps we realize it was just like that. A bank is sitting on a huge CRAR and feeling very safe. But that also indicates that you are not taking proper risk. That's why your CRAR,
complacency was there.
the CRAR is so high. So we were kind of being more conservative. We are not able to pass on the benefits to the bankers,
So there was
or
a
even to the
rethink.
borrowers. Yes, so there was a rethink, and we did a lot of things. The limit was raised from 2 CR to 5 CR. That we did. The coverage range also was raised. The fee was reduced by 50%. So whatever fee was being charged, that we reduced. Then we also realized that the proof of pudding in eating. I mean, I go on telling people that we are very, very robust, and we are very transparent in our dealing and all. But I told my team that just like any insurance company, you would be treated by the claim settlement ratio. And I told them that I do not want to be remembered as a company who is very smart in issuing the guarantees, but very, very, conservative and very stingy when it comes to settlement. So I said that please don't do that. I also told them that the settlement of claims need not be seen as an expenditure. I told them to look at it as an investment, because the more, fluid or more customer friendly you become in your settlement process, you would be enthusing, or you would be encouraging more and more bankers to come forward and do that.
Absolutely.
So I'm very happy that this is working out very, very well the way I had planned. And you are free, you can talk to the ecosystem, the bankers and all. And I'm sure they will have very good things to talk about CGTMSE, that their process has improved, the rejections have gone down. And earlier also, and while doing that, I'm not saying that we have done away with our filtering and all. The only thing was that there was some systemic flaw in the entire manner in which we are operating, that the things were getting delayed. So that brings to the second part.
It's a change of culture.
It's a change of culture, and what we did earlier, a lot of manual interventions were there. So I said, boss, let's do away with that, and we embarked upon a very ambitious project, the guarantee management system. It was end-to-end solution, right from application lodgement to claim settlement. Entire thing would be digital. There wouldn't be any manual intervention. Now, the moment you do that, a lot of redundancy automatically goes away. And when you do that, you're not lowering your guard or reducing your DD and all. You don't do anything. Only thing that you do is you remove the subjectivity, and the moment you do that, the time taken goes away.
It scales up faster.
It scales up faster, and perhaps that is the reason why, as I said, that there is 600% growth in a day-to-day guarantee issued. This is just like that, because I asked them a question. Once an application comes, what do you look at? So they said A, B, C, D. I said, if you can look at A, B, C, D, can't the machine do the same thing?
Absolutely.
So yes, they can do. So it was very simple. You just put a BRE. You put a BRE, so the bankers, they are sending, if the BRE, this condition A is ticked, B ticked, C ticked, all are ticked, immediately you issue the guarantee certificate to them.
So essentially you digitally transformed the organization.
Entire
it's a
thing.
digital transformation.
It is digital transformation is one part. Second was the changing, as the term that you put,
changing
the culture.
culture.
Yeah, so that we changed, and a lot of human resource related initiatives also were taken. So the manpower was taken care of.
That's where the culture comes in.
Yes, and then they were kind of told the importance that they have, and once it started showing the results, then they also get enthused. Okay, I mean, we are capable of doing that. We are getting recognized. So that in itself, gets you a kick. So earlier it was like a playback singing. We are happy doing the playback singing, but now we want to come out, and we want to come out and speak in as many words. What do we do? In fact, that has been my
so there's
philosophy.
a change in mindset. There's a significant change in mindset.
Correct. And also this also leads me to a situation where I am feeling very confident in going in public and talking about my scheme, because
Absolutely.
Unless until your house is in order, you do not
can't
want to go out
and
because if you go there, you will be open to more criticism than you will be getting appreciation. So what we did, that first we improved we set our house in order, and then we started going. So every gesture was very well appreciated from the banker side as well as from the borrower side. So this has made the entire change. Some changes in the policy related matters. The second, the cultural and the non-policy related, the way we behave, and the guiding mantra has always been, I mean, no gainsaying in saying that, but the fact is that ease of doing business. So I told them that we have to make the bankers feel very comfortable using this mechanism, because for me this is the only business, but I know the bankers do n number of works. Along with that, they also do this guarantee thing. So I didn't want them to the guarantee coming to them as an extra work for them, because the moment that happens, so there is a natural reluctance. So we have gone to the extent that we have entered into API integration with a number of banks. Almost the 80% of our business is now coming through API. In terms of the institution which are giving 80% of our business, so we are getting integrated with them. So this has
really
brought
put on the hat of a turnaround CEO.
Yes. And this brings so much comfort to them, because the case is done. So they immediately decide, and the entire data flows to me, and then we have become part of their digital journey itself.
Absolutely.
So if they have a digital journey, somewhere I have come in between. So the entire journey is now digital.
So there's synergies in both the organizations.
For them also it makes sense, because if I become integral part of their journey, then only they also will be able to do it in a day, or PSB online like 59 minutes, and so all these things could be done when I am also part of that. So we are very consciously working on that, and we are not leaving any opportunity to get integrated in more and more such kind of the journeys.
So you behave like a smart tech entrepreneur CEO, right? You first fix the product market fit, then fix the digital transformation, then the culture of the organization. So taking it from 0 to 100, really.
Correct.
Right?
So I always believe that it has to be a wholesome change. I mean, if you do changes only in piecemeal, then the impact would not be this much. I don't say that having changed only the policy would not have resulted. Yes, it would have resulted, but definitely it would not have resulted
In the implementation.
in the implementation and in the measure that is we have been able to do now. I mean, you imagine from 40,000 crore to 2,50,000 crore in a year. It would not have been possible had it not been for a wholesome change that we have been
And
able
nothing
to.
scales like technology.
Nothing. I mean, it's we are riding the success sitting on the technology wave only.
So, sir, now I also want to understand from you that how are you building this organization for the future? That it is like it's an institution. It has to be sustainable for the future, 10, 20 years from now, right? It has to be anti-fragile. So how have you built that?
Correct.
Is it an autopilot right now?
It is in autopilot. The only thing that I keep telling that for an institution like us, which is mostly a reactive institution because I do not lend. So the lending has to be done by the banks. Then they come to me and I give guarantee. So what I am required to do or what I can do is to make life good for the bankers to use this mechanism to lend. But ultimately it has to be done by them. So the most important thing that I have to do and I keep telling my team to do is to be totally nimble footed. We have to be ahead of curve. We have to understand what bankers want and what type of comfort I'm in a position to give the bankers. I'll give you one example. The traditional method of lending, it's a asset based lending, the balance sheet appraisal and all those things. Now there is a move from that to cash flow based lending. So we immediately changed and we allowed all the bankers to go for this because this becomes very, very important aspect for them. So like this for everything, now the concept of sachet financing is happening with the very short term lending is being done and all. So our initial scheme was not catering to that because of that original guidelines that there would be a lock-in period, there has to be certain conditions would be there. So realizing that the bankers are going for this small term financing, so we changed ourselves. So being nimble footed is the most important thing and that we are doing. As far as the challenge is there, I feel that the risk that we are incurring, I mean, obviously anything which has to do anything with the finance, the risk would be there. So the risk management thing is important. So that also we have constituted risk management committee and all those things. They keep reviewing and any change that we do, we go to them, take their advice and we do. But this is one aspect where we can't let our guards down. So that is another aspect. The third could be that the way we are growing, the corpus, I mean, the good thing is that whatever corpus has been given to us by the government so far, we have never had any occasion to touch that corpus. Right. So that is a very, very positive thing. In fact, 2 years back, looking at our performance, the government infused another 9,000 crore to our corpus. So that in itself is a,
it's a pat on the back.
Pat on the back and testimonial. But the way we are going, the leverage will become tight because the way we are growing, the numbers are increasing every year.
Expectations are higher.
Expectation is one thing, then once the number goes up, then the leverage starts getting tightened up. And once it becomes tight, I think today we would be around 10.8 to 11. So there is no global benchmark, but normally it is said that up to 15 times leveraging is all right. Beyond that, then you have to start. So once I reach that, then the continuous support from the government in terms of corpus could be there. We are also thinking in terms of getting it reinsured because so far it has not happened in our country. So that is again a novel thought that I am exploring. So if that works out well, then the dependency on or the burden on government also could be reduced to a large extent. So if I am able to get my guaranteed portfolio reinsured, so we are working on that. The only thing we'll have to see how much is the cost. So there would be some ballpark numbers that if I am say settling a claim of about X rupees, so anything which is X plus something is okay for me to go for that reinsurance. So what is the cost and what is the mechanism that we are working on? But if that becomes, then I am covering myself sufficiently. So all these things, new things are there that we are looking at it, which are very, very important in terms of de-risking my portfolio also. And then proper data analytics, of course, would be required. We are doing that which segment is doing good. many myths are there.
Yes,
we keep
yes,
thinking
absolutely.
that retail trades, when we started retail trades pay, we had given a lesser coverage. The idea was that perhaps they would see more contamination. That's why in the initial phase, a lower coverage was given, only 50%. But when we did data analytics, we found that their performance was as good or as bad as any other loan. Then we brought them at par. So being nimble-footed, do the data analytics, make use of technology. These are the things that
And break
we
the
have to
misconceptions and the biases
break the
that come.
misconception and go on for removing this information asymmetry. I mean, in a country like ours, it becomes even, the problem
Absolutely, it's a
becomes
sin.
very, very huge.
Yeah.
It becomes very huge. I mean, you go in the metros or the towns or the urban areas, people would be aware also. But you just think about, you go to a very far off place and all.
A
There
country
people may
as
not be.
huge as this, we definitely
So,
need more
yes, and it is
initiatives.
never ending kind of a scenario where we have to go out in public and shout out,
Yeah.
boss, we are doing this.
So,
that kind of thing
we
have
heard
to
and
do.
understood from you very clearly and very beautifully outlined that how it is being more and more made more and more friendly from a banking perspective, right?
Correct.
Because ultimately, in a way, they're your clients then,
Yeah.
right? One can say that. But there's also a new kind of animal which is coming into the funding space, which are the venture debt funds. Of course, on the equity side, you have the VCs and the private equity guy. That's a different kind of equity structure altogether. What is your relationship with venture debt funds? If there's a reluctance to partner with them, how open you are to getting them onto your cap table or working with them? What is kind of the sense and relationship that you have with these folks?
So it's a very good question. We realize that venture debt is, as well as equity and debt, both are very important part of meeting the credit requirement of micro, small and medium enterprises. Actually, there is a special scheme for debt guarantee. It is being run by NCGTC, which is another institution under the control of Ministry of DFS. So they are taking care of that. As far as we are concerned, the major problem that I think that we feel that would be forthcoming in this, that for me the member lending institution are banks and the NBFCs and all, and they are not so gung-ho about venture debt, at least at present.
Till now, yeah.
Mostly it is being given by the AIFs, Ulterior, Trifecta and what you have. And the NCTC scheme, they have made this alternate investment funds also eligible for this thing. So there they can go and take. Having said that, if some bank is devising a scheme and they are doing venture debt, so I have no issues. If those lending is meeting the criteria of a credit facility which is eligible for me under my normal scheme, I do, because as I said that the due diligence or the appraisal has to be done by the bankers.
Yeah.
If the bankers satisfy themselves for whatever
Then you have no issues.
measures they have, then I have no issues. In fact, my mother institution, which is SIDBI, because SIDBI is one of the
Yes.
settler besides Ministry of MSME, they have a venture debt scheme. They are doing that and they are covering those cases under our scheme. So this can very well be done, but this can be limited only to the venture debt being given by the bankers, not by AIFs. So AIFs are not our member, but my message to them would be that they can very well go to
AIFs.
NCGTC and get it covered. But yes, venture debts, the view has to be taken by the bankers, because it's as you rightly said, it's a new animal. So somebody has to get familiar with the animal and then start doing. But once they do, the bankers do, then we can, going forward, if the number increases and the volume increases, maybe we can suitably, as I said, that we are very nimble footed, so we'll change our guidelines to some extent to support that also. So it's not a no.
But there's a reluctance from the banking side as of now.
I mean, naturally,
Not
because
so gung-ho about
yeah,
it,
it's natural also, because see, different kind of lending is to be done by different people. I mean, we must realize this. In an analogy to cricket, a batsman has to score runs and the bowlers has to take wickets. So you can't have all-rounders all around. I mean, when I was a kid, I used to feel or used to think that why don't we have all 11 all-rounders? So our team will have a virtual strength of 22 people. In
Doesn't
practice,
work.
you don't get that situation. So this is how it is.
So my last question to you, we had such a beautiful conversation today. We spoke about the entire reason why CGTMSE was constituted. You spoke about the rationale behind the credit access to MSEs, the impediments, how you are solving for it, the playbook in other countries, how you have built this organization for the future, the success stories, in fact the challenges you also outline, the entire access to different kind of funds and everything. I also want to understand from you that what role do you think MSEs and institutions like CGTMSE will really play 5 years, 10 years down, when we look back at the history and India would be, say, a Viksit Bharat by 2047. What will be the role which an institution like this would have played in the growth of an economy like ours?
See, I am very clear that by 2047, if India has to become a Viksit Bharat, which I am very sure that will become, it has to be done with the support and with the growth of MSEs only. It cannot be done by the large corporate. While they can be the growth engines, the bogies of that engine have to be necessarily MSEs, because
Beautifully said.
Because the MSEs will only lead to employment, it would only lead to regional balances, and it would only lead to, you know, the channelized development across the sectors. So the importance of MSEs are going to be there, and if 2047 is to be achieved, it can be done only through them. And in that, I feel that an institution like CGTMSE is going to play a very, very important role, because there is a committee report which came in 2016 or 17, Mr. K.V. Kamat's committee recommendation on architecture of financing to for the banks and intermediaries. And there they have said that, ideally speaking, the guaranteed portion of total lending which is going to micro and small, it should be about 25%, because the thought is very clear that see, the data only reveals you what is being done. What is not being done, it's not captured by any data.
True.
So unless until we reach a situation where the bottom of the pyramid, or the nano or the IMEs that we talked about, they are properly supported, this growth story would never be very complete, or it would never have the, you know, the pleasant feeling all around it.
Absolutely.
So if you want to have that, you have to have something for the smaller ones, that a free flow. I mean, with free flow, I do not mean that, you know, reckless and you know, no holds barred. I am saying free flow in a sense that in the same fashion as it is happening for the larger guys. If that is to be done, then a good indicator of that would be that how much credit flow is going through credit guarantee. Because if only 10%, suppose today I think I share about 10%, 9 to 10% of total credit which is going to MSEs. So that clearly means that the collateral free lending cannot be more than 10%, because whatever I am doing, some of it would be in hybrid model. So the collateral free lending, if it is only say 8 to 9%, then there is a question mark on us that many people must be being denied because they do not have collateral.
True.
So the moment this percentage goes up and it goes to 25%, as Mr. Kamath has suggested, so that would be a clear indicator that, hey, now people without collaterals are also getting true representation, and they are being given credit in a good number. So that is where we have to reach. And this growth that you talked about, that you know, that 2047, if we have to reach there, and we have to become second largest, and these you know, milestones also we have in our mind. Then I was reading somewhere that the GDP has to grow continuously at a CAGR of about 10% continuously. So from where do you get this kind of growth support? CGTMSE or an institution like CGTMSE, including NCTC, we can be the force multiplier. For
That's the
credit
right
flow,
word, force
yes,
multiplier.
and we can be the engine through which this lending to the micro and small could be increased manifold, which without certain support, bankers would not be able to do that. And when I say that they'll not be able to do that, I'm not casting aspersion on their ability, because it will not work out. See, ultimately they also
You
have to
create
take
a win-win situation for
exactly.
both,
They
right?
have to take care of their risk, also the credit risk and all. And believe you me, I mean, the days of helicopter dropping of money is over. I mean, everybody would put their money where their mouth is. So it would be it would be very immature on our part to think that entire thing can be done by the banking sector or the NBFC around without creating a good infrastructure around it. And this mechanism, that credit enhancement, is a good infrastructure because
So you really are the ecosystem builders, the
we
pipeline
are,
makers.
we are, because ultimately what happens, you see the emergency line of credit. So government was very smart in declaring the emergency line of credit post COVID, and they said that 20% of outstanding loan you give loan, and it would be 100% guaranteed by an institution, which is again NCTC. Very smart move. Rather than pumping 4 lakh crore directly into the which would have meant a lot on the in terms of the burden on the exchequer, they said that it will be guaranteed by NCTC. Now, by doing that, the burden on the government or the exchequer is limited to the extent of accounts getting converted into NPA only.
That's it, yeah.
And even if you assume 10% of NPA conversion, so your requirement of pushing the money into the system is reduced by, say, 10 times.
Absolutely.
So that is a huge relief for the government also, and once that is done, that money could be used for so many other things. See, I am into discussion with various state government, and we have entered into MOU with different state government, and I say that look, I am providing guarantee for 75 to 85%, and if you want that the flow of credit in your state goes up, why don't you put a small fund with me? Out of that fund, additional guarantee of 10% or 15% could be provided to the borrowers, and the bankers have more confidence. Their credit risk is covered to a larger extent. So instead of 85%, the coverage becomes 95% something. The bankers would be more keen. This could be very effective in the states where which are lagging behind. We have done it in Assam, we have done it in Manipur, we have done it in Meghalaya. So many states we have done, 7 we have done, and with many more the discussions are on. And there we have shown to the government that the multiplier effect of the support that they are doing is about 50 times. So if they put a fund of even 100 crore to us, that helps us in creating a portfolio of 5,000 crore, assuming a 10% NPA. There are certain assumptions, and those assumptions are very realistic. It's not that very rosy assumptions have been done to show some numbers. So you just imagine 50 times growth in portfolio creation could be done. So guarantee scheme is a very important scheme and very important force multiplier.
Thanks for that, sir, because one doesn't really know. In today's conversation, we got to know so much. The government is thinking so much about MSEs, the kind of schemes that we have, the force multiplier that you spoke about, and how you're really building the ecosystem and pretty much the pipeline. So you are the pipeline between the borrower and the sort of banker in a way, and facilitating that pipeline, I would say.
Yeah,
right?
I mean, since you are talking to me, my role is being overemphasized, but I'll say I am just a cog in the wheel, and there are many players, and I do admit that it takes everybody, to create an ecosystem and to take the economy forward. But yes, I do agree that we do play we play a very important role. And this relation is there in everybody's mind, be it the government, be it the bankers, be it the borrowers, and as they say, the proof of pudding in eating. I mean, if you see the data that I shared with you, had there not been this kind of belief in the system, the growth would not have been this kind, that from 40,000 we have gone to 2 lakh crore, and whatever we have been able to do in last 2-3 years, it is roughly about 2/3 of what we have done in previous 22 years. So that gives you a kind of a thing that how sharp the increase has been in the last say 2-3 years.
Kudos to you, your leadership team, and your entire team with which you're building this organization.
No, it's all because of the team only, because I can only provide a guidance to them. Ultimately, it's they who do the everything.
And the support of SIDBI and the government.
Yes, and the government and SIDBI, of course, goes without saying. The government has always been very supportive. SIDBI, of course, being the mother institution, has been providing all the support. Without them, nothing could be done. I mean, that goes without saying.
And for me, sir, I think I got to know so much what the government is doing for furthering this cause of MSEs, because we often just keep saying...
This is what the information asymmetry is there. If a person like you are not aware that much, what to talk about. And this is what we are trying to build. In fact, creating this podcast also is aimed towards that.
Absolutely.
That we want that these things to reach out to various people.
Because one just talks the headline numbers that the credit access to MSEs is not there, but one
Correct.
doesn't really look at the solutions being provided
Exactly.
to solve for that gap.
Exactly.
I think the focus needs to shift to solutions rather than just talking about the
Very
problem
true,
headlines.
Very true. In fact, I keep telling my team when they come to me with a problem, I say I'm not interested in knowing the problem. I'm interested in solution. So unless until you have a solution, don't come to me.
So, sir, now we'll do a bit of a rapid fire with you, okay? And perhaps it could be like non-CGTMSE questions.
So it's becoming like coffee with current kind of a thing. Okay.
Okay. What has been the highest point in your career till now?
Undoubtedly being in CGTMSE, sitting at this chair.
Okay, great. What is your biggest fear in life?
Biggest fear of in life would be that I feel that I'm a man in a hurry, and there is so much to to do and achieve. So the biggest fear is that whether I'll be able to convert those things in reality about which I'm thinking now, or I'll be thinking maybe tomorrow, because that constraints also I am aware about. So this is a fear that so much to do, and why we have such a short life.
Okay, sir. One leader who inspires you the most?
One leader, it's Honorable PM.
Okay. And so one significant challenge which you have overcome in your life, which you think and you're very proud of?
It's related to CGTMSE, but I'll say it is not about the business. It is about the HR or the manpower of CGTMSE. So there I have been able to make some contribution, because it was being run for the last 20-21 years in a very, I shouldn't say in an ad hoc manner, but it was a manner where no permanent staff were there, people were only on contract, and also so I guess and I think that I have been able to bring some stability in the HR matters, and that is really very satisfying.
And what do you do in your pastime? What is one thing which you enjoy the most?
Watching movies, reading novels, these two, and listening to good songs.
And who is your favorite author? What are you reading these days?
Author is, if I go to the literary side, then Guljar is my favorite writer. So wherever I get time, I just pick up. I like classical Hindi novels, and Agay is one of my favorites. So whenever I get time, sometimes when I get depressed also I pick up, I read. Then the Bengali literature is very rich, so I pick up any, and I am never tired of reading already read book. I am never tired of watching a already seen movie. Whatever looks good to me, interesting to me, I can do that time immemorial.
So the last question I have to ask you this, that you have come so far in life, career-wise, and of course there's so much to go, and there are many in your peer group perhaps who share the same kind of success. Have you also faced significant bias, just given the place where you come from, and perhaps that has created a lasting memory or impression?
No, I have not faced that. And see, I come from a very small town, but education wise, it was a very good place. I was in a residential school. Of course, I came from a small place, but I never had any bias in that sense. So acceptability is there. Luckily, I mean, maybe it was due to me being in an all India institution like SIDBI, which is already kind of a pot where people from different areas are coming and all. I don't think that bias is there, neither the place thing or the language thing. Sometimes people also think that not speaking good English or something could be a handicap, and also these bias I have never faced. So maybe I am the lucky one.
Okay, so one last question, one message to entrepreneurs who are listening to this podcast, who are like really striving hard and trying to make it win every day.
Please make good use of CGTMSE scheme. Even if you have collateral, keep that for a time when you grow out of CGTMSE, when you require loans more than 5 crore, use your collateral for that time, because remember, there won't be any CGTMSE to help you. I can help you only till your loan requirement is less than 5 crore. So till you cross 5 crore, do make good use of CGTMSE scheme. This scheme is for you only.
Thank you so much, sir. Thank you for your time and energy for this conversation. Thank you for hosting us at your office.
Thank you very much. Thank you.
Thank you.